Why experience still matters in commercial lending. And in today's commercial lending environment, borrowers have more financing options than ever before. Banks, credit unions, debt funds, private lenders, SBA lenders, agency financing, bridge lenders, and marketplace lending platforms like CommLoan all compete for your business. While technology has dramatically improved access to capital, one truth remains unchanged. Experience still matters. And for commercial real estate investors and business owners, choosing an experienced commercial mortgage advisor can mean the difference between a successful closing and a failed transaction with a lot of heartache. And commercial lending is so much more than just finding the lowest interest rate. And many borrowers assume that commercial lending is simply shopping for the lowest interest rate, where in reality, experienced advisors know that every lender has a different appetite. And one lender may love hotels, while another specializes in self storage. And a regional bank may aggressively finance owner occupied industrial properties while avoiding retail centers altogether. And an experienced capital advisor understands these differences before a loan package is ever submitted. And what that does is that it saves my clients and my borrowers valuable time while dramatically increasing their approval odds. Every property has different lending challenges, and commercial real estate financing is rarely a one size fits all type deal. And property types often require unique financing strategies, including, say, multifamily apartments, or hotels, or office buildings, or industrial warehouses, or medical buildings, or self storage, or retail centers, or mixed use developments, or churches, or restaurants, or construction projects, and land development. And each asset class carries different underwriting guidelines, risk profiles, and lender preferences. And experienced advisors know exactly where each loan belongs. And experience is going to help us structure better loan requests for you right from the get go. And many loan requests are declined not because the property is bad, but because the deal wasn't structured and presented correctly. I can't emphasize that enough. Experienced advisors often improve loan approvals by helping clients adjust leverage, improve debt service coverage, add additional collateral, structure guarantors properly, select the right amortization, choosing the correct loan program, and prepare stronger financial packages. And small tweaks and adjustments often produce dramatically better lending outcomes. And relationships still matter, and commercial lending remains a relationship business. And experienced advisors maintain relationships with hundreds of lending institutions. And these relationships allow advisors to receive honest lender feedback about what they're saying and thinking, but also to solve underwriting issues early and match borrowers with appropriate capital sources and negotiate better terms and keep transactions moving toward closing. And the result is something you'll like: fewer surprises and more successful closings. And technology is powerful, but it doesn't replace experience. And modern lending platforms can instantly compare hundreds of lenders, and that's incredibly valuable. But however, software cannot replace decades of real world lending experience, knowing what works and what doesn't work. Technology identifies possibilities, experience identifies probabilities, and the best commercial financing combines both. Every commercial deal is different, and no two commercial loans are identical. And variables can include the property type and borrower experience and tenant quality and cash flow and market conditions and loan purpose and exit strategy and construction risk and occupancy and recourse requirements. And experienced advisors can recognize potential issues before lenders do. And that proactive approach often prevents delays and last minute surprises. So, why investors choose experienced capital advisors? And commercial real estate investors understand that financing is part of their investment strategy and not simply a transaction. And an experienced advisor can help clients preserve cash and improve leverage and increase returns and structure future refinancing, but also reduce closing risk and expand acquisition opportunities. And that's why sophisticated investors rarely shop loans alone. So, final thoughts for today. And commercial lending has become increasingly sophisticated, but experience remains one of the most valuable assets in any transaction. And an experienced commercial mortgage advisor doesn't simply submit applications. They structure financing strategies designed to maximize the likelihood of success. So whether you're purchasing your first commercial property or financing a multi-million dollar portfolio, having an experienced lending professional on your side can save both time and money. And if you're planning your next acquisition, your refinance, or a construction project, or any investment, let's discuss the financing strategy that best fits your goals. My name is Bill Rapp. I'm a CCIM and a commercial mortgage advisor. I invite you to check out my website, billrapp.comloan.com. Look forward to talking with you more, and thanks for watching.